Assalamualaikum and good morning. Today I'm glad to welcome all the board members to the annual general meeting 2021 and also the presenter, Miss Atika and Miss Akila as our financial manager, Miss Adriana as our accountant, and lastly Miss Ainsha Mimi and Miss Afifah as local bank. The objective of our meeting is to receive and consider the financial report for 7-Eleven Malaysia Berhad and also apply loan in Maybank to invest. Before I start to our meeting today, can we proceed to the next item regarding the minutes from the previous meeting? Any amendment?
No.
By the way, if Miss Ain Shamimi and Miss Afifah have a question or comment relating to this item, please ask after the presentation.
Okay.
Okay, let's proceed to our main objective of this meeting, the report of open discussion. Miss Adriana, you may start your explanation now.
Thank you, Miss Chairperson. So I will explain about the detailed statement of financial position of 7-Eleven Company 2021. The total non-current asset has increased by RM 1577983 compared to previous years. The total current asset has increased by RM 672933. And then the total liabilities is increased by RM 206873. And lastly, the total of equity increased by the previous year, which is RM 182043. So we go to next statement of profit and loss profit of 7-Eleven. The gross profit is RM 759583. The earning before tax is 92899, and then the earning after tax is RM 58840. Then we go back to statement of financial position. After we round it up all liabilities and equity, it will make a total of RM 2250916. So all of details to be higher than previous year of 2020. These are from me. I will pass back to Miss Chairperson.
Thank you for the presentation, Miss Adriana. Next, Miss Atika and Akila, you may proceed with your ratio analysis.
Thank you, Ms. Chairperson. Firstly, I will talk about the liquidity ratios of the company for the year 2021. The current ratio is 0.80 times and the quick ratio is 0.34 times. This means that a company can exactly pay off all its current liabilities with existing assets. Next, we move on to the company activity ratios. The average collection periods for 2021 shows that the company can convert its receivable as fast as it should. The inventory turnover is 5.35 times. Given its relatively low ratio, it shows that a low inventory turnover can signal poor sales or high inventory levels. For the fixed asset turnover, the time is 1.78, which is the higher rate ratio, indicating the firm is efficient in generating sales from the available fixed asset. And lastly, for the total asset turnover, the ratio for 2021 is 1.25 times. The rate shows that a low rate indicates it's not efficiently using its asset to generate sales. For the leverage and pure profitability ratio, I will pass to Ms. Atika.
Thank you, Ms. Akila. So now I will continue to explain the leverage ratio. For the debt ratio in 2021 is 37.40%. The higher the ratio, the greater the debt level, the greater the amount of other people's money being used to generate profit. Next is debt to equity ratio. In 2021 is 600 74%. The higher the ratio, the greater the debt level, and higher ratio is less desirable as it indicates higher risk. Last one is time interest earned ratio in 2021 is 2.52 times. Higher ratio indicates the firm is in the position to continue making payment on its interest obligation without difficulty. Moving on to the last ratio, which is the profitability ratio, the gross profit margin in 2021 is 27.04%. Higher ratio is preferable as it shows the firm is efficient in controlling its COGS. Next, for the operating profit margin in 2021 is 5.49%. Higher ratio is preferable as it shows the firm is incurring lower operating expenses. Next ratio is profit margin, which is 2.09%. Higher ratio indicates higher ability of the firm to obtain profit from the given level of sales. Next ratio is return on asset, which is 2.61%. Higher ratio indicates higher ability of the firm to obtain profit from the given level of assets. Lastly, the return on equity ratio is 32.32%. Higher ratio indicates higher ability of the firm to obtain profit from the given level of equity. With that, I think that's all for the company's analysis ratio.
Thank you for the presentation, Ms. Atika and Akila. So how about your opinion, Ms. Ain Shamimi and Afifah? Can we apply for a loan from Maybank to invest in 7-Eleven Malaysia Berhad?
Okay, thank you to the chairperson and financial manager, also an accountant, for your explanation. I agree invest with 7-Eleven because their ratio increasing compared a past year. Short-term loan. Your company is planning an expansion project for their existing plant in Melaka. It is estimated that the project takes 10 months to complete and generate additional income for the firm. Your firm needs 28,900,000 additional financing, and below are the alternative. Alternative 1, a 10-month short-term loan from Maybank with an annual interest of 7% on a discount basis, and the bank require a comparating balance of 5%. I will pass with Afifah Balkis.
Thank you, everyone. So after the calculation is made with the total effective interest rate 7.37%, I think your company can proceed with the short-term loan. So after we review details, this company financial statement, the outcome financial statement for 2021 is better. This means that this company has a higher chance to extend to a loan first. Based on the ratio presented by Ms. Atika and Ms. Akila just now, I can clearly see that your company sales is better, which is RM 280,900,000.
I think I agree with you, Ms. Shamimi and Afifah. Alright, good. Shall we close the decision?
Yes.
Thank you for cooperation. I hope we will meet again in the next meeting. Thank you.